Welcome to the STR Home Financing Podcast, where we believe a legacy is something you build, not just something you leave behind. And now, here's your host, Jeff Chisum.
Hey, this is Jeff Chisum with STR Home Financing. Welcome to episode 43. I have some big news for someone, or maybe a lot of people. But today's episode wanted to touch on one of the biggest changes I've seen with mortgage products in probably the past decade. And it is up there with the changes that Fannie and Freddie made with the 10% down second home occupancy loan, where they really opened up the policy to make it more friendly for people that were looking to buy vacation homes that they wanted to rent out on a short-term basis. So this is huge for people that are looking to invest in real estate, where the down payment requirement is drastically different than the old policy. I, for probably the past 2 years, really thought that the cards were stacked against us when it came to the policy that Fannie and Freddie were coming out with as it related to people that were looking to invest in real estate. So that looked like the loan level pricing adjusters that they imposed on the 10% down second home occupancy loan, where it drove up the rate, it drove up the cost of that product to where it wasn't even a viable option. Now, we went out there and found a unicorn to help people with that, where we don't have to go through Fannie and Freddie. There's usually a workaround if you can go out there and seek it. Sometimes they're there. We found it in that case. So what I want to talk about today is financing opportunities for multifamily. Old policy was on a 2-unit property, 3-unit property, 4-unit property, you were having to put down as much as 20%, 25%, 30%. And really, to get decent pricing, you may even have to put more than that. About a month ago, and it just went into effect here recently, Fannie and Freddie came out, and this is still hard to believe, where if you're buying a 2-unit, 3-unit, 4-unit property as a primary residence, the minimum down payment, you ready for this? You sitting down? Is 5%. That's right. You only need 5% down to buy a 2, 3, or 4-unit property. Again, the big catch here, don't miss it, is your intention has to be that you're going to occupy this as a primary residence. What if, I'll take myself as an example. We still have 2 kids at home. We have a 16-year-old at home. We have a 10-year-old at home. And I don't see us moving into a multifamily property where we're going to occupy 1 unit, rent the rest of them out. We're just not at that place in life. Now, the other part of that equation is I have a 23-year-old son and I have a 20-year-old daughter. Now, what if they wanted to occupy one of those properties as a primary residence and rent those out? Absolutely. So maybe you help with a down payment. You come up with a gift. Well, the next question is, I've got a college student, or my 20-something-year-old isn't at a job earning income at a level where they could qualify for a property that would cost that much. In that case, and it's something that I'm looking at as well, is to get them in the property. What if I went in as a non-occupant co-borrower? It is allowed. So I can bring my income to the equation to help my 20-something-year-old, maybe even if it's a college student, they don't have any income to go towards qualifying, but they have established credit. You had big enough of vision when they were a teenager to get them that credit card. Maybe you put them on as an authorized user. You put them on the car note to help them build their credit. So they're this college student that has a 750 credit score. So I'll use my daughter as an example. She's married now. She's a nursing student. We did help her build her credit. I potentially could go on that loan with her as a non-occupant co-borrower, and she's going to occupy that property with her husband as a primary residence, and they're going to rent out the other units. And maybe it cash flows to the point where it pays their portion of the mortgage as it's divided among the units. and you're looking at the numbers in that way. So you can go on the loan as a non-occupant co-borrower. Now the goal is they go out, they get their real job, they start earning more significant income so that they could refinance out of that loan. So that would be a conversation that I would have with my daughter and son-in-law is, hey, this is to get your foot in the door, but the end goal is here with the next 2-3 years. So the conforming loan limit is now $750,000. So what does that look like with a 5% down payment? On a 2-unit property, you could go up to a purchase price of 1 million, and the loan limits increase on each as you get additional units. So 2-unit is at that level, then you go up to 3 units, 4 units, the loan limit increases. So what I'm about to give you is your max purchase price for each multifamily property. So 2-unit, you could go up to $1 million purchase price. On a 3-unit property, you could go up to a $1.2 million purchase price. And on a 4-unit property, you could go up to $1.5 million on the purchase price. So the next question would be, okay, yeah, I'm not sure that my child is going to get up to the income that they're going to need to in order to qualify and refinance out of that loan. Or maybe I may have some restrictions or limitations on what I would be able to qualify at that price point with everything else I have going on. So the good news there is that you can use up to 75% of the market comp rent towards qualifying. So in other words, you're only having to qualify for 25% of that principal, interest, taxes, and insurance payment into your ratios to purchase the price, or if they're going to come back and refinance that loan into your name. So I hope that information helps someone or many people out there. Always happy to jump on a phone call and discuss your dreams, hopes, and aspirations. You can go to www.strhomefinancing.com. And I get the question all the time, Jeff, you're the short-term rental finance guy. Yes, that is true. The majority of my business is helping people buy vacation homes, but I can do financing on any residential property up to 4 units in all 50 states. So hope that helps. Until next time.
Jeff Chisum is a registered mortgage loan officer with CMG Home Loans, NMLS ID 1820. CMG Home Loans is an equal housing lender. All programs, products, and terms discussed on this show are subject to change without notice.